Hello, Melissa Darmon for the Finance News Network. Today I'm talking to Managing Director Andrew Corbett from Kingston Resources. Andrew, welcome back and nice to meet you.
Hi, Melissa, and thanks for having me back here and great to be talking to you about Kingston today.
It's great to have you. For those tuning in for the first time, can you give us an overview of the company?
Yeah, Kingston Resources is a very focused gold developer or aiming to be a mid-tier miner. So we've got our cornerstone asset being Misima, which we see as an opportunity to build a business around. It's a 20-year mine life. It's a big project, and it's a fantastic stepping stone to become a developer from.
Thanks, Andrew. So let's touch on that. Tell us more about the size of the resource and the project economics.
Yeah, Misima, we've recently upgraded the resource in September to 3.8 million ounces, and most importantly, 2.5 million ounces of gold this is. There is a big silver credit as well, which we can talk to. But 2.5 million ounces of the gold is in the indicated category, which is 700,000 ounces more than we had in our previous resource update. So we expect the resource to keep growing. We expect the reserve to keep growing, and the project's still open at depth. It's open to the east. It's open to the north. So there's a massive opportunity for this to continue to grow and be a larger resource base.
Could you comment on the Umina resource and what the next steps are and what it's all about?
Yeah, so the Umina is 95 to 96% of our contained resources. So basically we've got one small starter pit of the project called Iwatanona, and then Umina is basically going to run for 17 to plus years. And it provides basically the feed of, it's a large plant. We're looking at a 5.5 million tonne plant. 17-year mine life currently on the pre-feasibility, average 130,000 ounces a year at an all-in sustaining cost of $11.59. So Umina basically is the backbone of that. With its, like I said earlier, it's got plenty of potential to keep growing Umina. In fact, right now our aim is to get cash flow, and we'll continue to grow the resource after we get cash flow. So that's our current strategy.
Andrew, you've mentioned another precious metal, silver. Can you tell us how it's going to contribute to the project?
Yeah, look, the silver gives a really nice benefit to our all-in sustaining costs. So what we have today is about 24 million ounces of silver in resource, about 6.5 million ounces in reserves. Now, shareholders should look for that to grow, that reserve number particularly. So what it does today, it provides $100 per ounce credit to our all-in sustaining. So that 11.60 all-in sustaining number is already included that silver credit. So any movement in the silver price provides fantastic leverage and lowers our all-in sustaining costs. So it just expands the margins. So if we can recover more silver and the silver price continues to grind up, then that's a great result.
And how about the Livingston Gold Project? Could you provide us a summary?
Yeah, so with Livingston, it was a smaller greenfields project in Western Australia. We've recently just sold that. We've always said it was a funding source for Misima. Misima's the main game. It's the asset that's going to run for 20 years, whereas Livingston, it's a smaller toll treating opportunity in Western Australia. So that transaction actually went through on Monday. It's due to complete in December. So we've sold that for up to $10 million. So effectively $5 million sort of upfront, with cash and shares, and then some milestones of another $5 million.
Okay, so let's take a deeper look at the financials. Can you also talk us through that and also the strategy?
Yes. So in terms of when we did the PFS, we used a $1,600 gold price, which delivered an NPV of $835 million pre-tax, that is, and an IRR of 33%. So economics at $1,600 gold were outstanding. Obviously, gold today is, flirting with $1,800. So the economics just get better. And in fact, when we published the PFS, we did provide scenarios up to $1,900. And you'll see the project, it delivers $5 billion in revenue. This is big. This is a big project at over 130,000 ounces. And a lot of investors say to us, well, why only 130,000 ounces? Why don't you grow that? And we probably will, but it's where we're starting at. So right now the DFS is underway. That's due to be completed in March next year, at which point we will also publish the new reserve. And that new reserve is going to grow. As I said earlier, we've increased our indicated ounces by 700,000 ounces. So we're hoping the majority of those ounces convert to reserves in this next update.
Before I let you go, we've seen fellow gold miners take the spotlight. How do you see the company placed among your peers?
Very well. So Kingston already has one of the largest undeveloped reserves on the ASX in the gold space. We get this update out. I suspect we're going to be the largest undeveloped gold reserve on the ASX, listed on the ASX, with a project of the 20-year mine life. Like I said, 130,000 ounces base rate. And most importantly, what's important for investors today is valuations. If you look at our peers and our comparisons, which is all on our presentation for people to look at, we're one of the cheaper gold stocks on the ASX. So that's a fantastic opportunity. How do we unlock that value? We get the DFS completed next March. We get the approvals in the following 12 months after that. That's where the money's going to come for the shareholders.
Andrew Corbett, thanks for the update. It was great talking to you.
Thanks, Melissa, and really enjoyed it. Appreciate your time.